and Transport Legislation Committee. The committee is hearing evidence on the committee's inquiry into the Air Navigation and Civil Aviation Amendment Aircraft Crew Bill 2011 and the Qantas Sale Amendment, still called Australia Home Bill 2011, and I welcome you all here today. This is a public hearing and the Hansard transcript of the proceedings is being made. Before the committee starts taking evidence, I remind all witnesses that in giving evidence to the committee they are protected by parliamentary privilege. It is unlawful for anyone to threaten or disadvantage a witness on account of evidence given to a committee, and such action may be treated by the Senate as a contempt. It is also a contempt to give false or misleading evidence to a committee. The committee prefers all evidence to be given in public, but under the Senate's resolutions, witnesses have the right to request to be heard in private session. It is important that witnesses give the committee notice if they intend to ask to give evidence in camera. If a witness objects to answering a question, the witness should state the ground upon which the objection is taken, and the committee will determine whether it will insist on an answer having regard to the ground which is claimed. If the committee determines to insist on an answer, a witness may request that the answer be given in camera. Such a request may, of course, also be made at any other time. I would also ask witnesses to remain behind for a few minutes at the conclusion of their evidence in case the Hansard staff need to clarify any terms or references. I remind people in the hearing room to ensure that their mobile phones are either turned off, Senator Heffernan, or switched to silent. Finally, on behalf of the committee, I would like to thank Mr Joyce and Mr Buchanan and Mr Johnson for their cooperation with this inquiry. I welcome Mr Joyce, Mr Buchanan and all representatives from the Qantas Group. For the Hansard record, could you please give your name and the capacity in which you appear today?
Alan Joyce, Chief Executive Officer of the Qantas Group.
Bruce Buchanan, the Chief Executive Officer of the Jetstar Group.
Brett Johnson, the General Counsel of the Qantas Group.
Thank you. You have lodged submission 2 with the committee. Would you like to make any amendments or additions to your submission?
No, Senator.
Okay. I invite you to make a brief opening statement, Mr Joyce, and then the committee will ask questions.
Sure, Senator. Thank you very much. And again, thank you for the opportunity to be here again today. As you know, I've appeared before the committee on the 4th of November last year. I took more than 3 hours of your questions, and since then the Qantas Group has answered more than 20 questions on notice. We've also responded to more than 200 supplementary questions. And just a week ago, we received yet more amendments to the bill, and we responded to them too. We've been very rigorous in responding to all that this committee has put to us. And we have endured examination and insurrections based on politics rather than policy. We have done so for one reason. We have grave fears for the future of Qantas if these legislation proposals come into effect. We want our position clearly understood and on the record because history will judge. The legislation proposed would constitute a major threat to our business, to Australian jobs in the cities and the regions, to investment and to growth. I want to make 3 points before taking your questions. First, the Qantas Sale Act amendments go way beyond the original aims of the legislation and would strangle our capacity to run our business. We all know that the primary purpose of the Qantas Sale Act was to ensure that Qantas remained a majority-owned Australian flag carrier, while pursuing its destiny as a non-government company running its own business and answering to its shareholders. That outcome meant Australian taxpayers had all the benefits of a national airline without bearing the cost. Nothing Qantas is doing is in contradiction of the spirit or the intent of the Act. The government has recently confirmed this. We continue to work hard to secure a viable future for our business, deliver sustainable returns to our shareholders, and fly the flag for Australian jobs and success. These amendments would not increase protection for Qantas. They would not make us more Australian. They would not save or grow Australian jobs. They would have the opposite effect. Senator Xenophon's most recent proposed amendments would have serious and I assume unintended consequences. To take just one example, he wishes to require that a Qantas Group airline such as Jetstar conduct the majority of its heavy maintenance in Australia. Jetstar would then be confronting competitors who enjoy a lower cost base by doing virtually none of the heavy maintenance here in Australia. Those of us running Qantas would then have a choice. Allow Jetstar to fail within the confines of the Qantas Sale Act, or sell it to allow it to succeed outside of the Act. This is a simple statement of the dilemma this legislation would construct. These amendments in total, from the makeup of the Qantas board to the location of our flight training, would apply intrusions and restrictions on the Qantas Group airlines that do not apply to our competitors. If Australians want a truly competitive national carrier, this Parliament cannot tie up Qantas in this way. You will be responsible for making Qantas less competitive just when we most need the freedom to compete. This is not a controversial view. The Secretary of the Department of Infrastructure and Transport, Mr. Mike Murdoch, told you himself that, and I quote, Australian airlines need to continue to have flexibility to adapt their business strategies to the changing market circumstances. He said, the two bills being considered by the committee raise significant issues for the operation of all Australian airlines and their ability to compete internationally. Let me turn to my second point, which relates to the combined impact of the Qantas Sale Act amendments and the Cabin Crew Bill. I note that this is the Standing Committee on Rural Affairs as well as Transport. But the amendments to the Cabin Crew Bill would not preserve Australian jobs. They would destroy them, especially in regional Australia. As you know, for many years now, we've had a liberalised aviation sector with domestic open skies here in Australia. But this has not led to new or sustained international air services by foreign carriers to many of our regional centres. The fact is the Qantas Group network remains critical to maintaining and growing those direct services. And that means as a business we need to be strong and profitable to retain sufficient scale in our regional, national and international networks. Whenever Qantas Group airlines use foreign crew and Australian crew on the same flights, Australian crew operate under Australian wages and conditions, and foreign-based crews on the terms and conditions of the domicile country, where they are employed and where they live. This is standard practice adopted by airlines all over the world. There are a limited number of routes where this occurs within Australia. We call them tag flights, involving a domestic sector of an international flight primarily servicing Australian regional destinations. These tag flights enable us to serve regional destinations in Australia such as Cairns and Darwin. If the amendments are passed, the international crews are treated as Australians in terms of wages and conditions on domestic legs of international flights. We will no longer be able to viably operate those international services. The proposed amendments would quite simply force the Qantas Group to withdraw services connecting Darwin and Cairns to tourism and trade markets in Asia and in Europe. The impact on regional tourism and development would be immediate and negative. It will result in loss of employment and investment in regional Australia, with flow-on effects for the rural communities who rely on these services in regional centres. Strangling our international business and forcing us to pay uncompetitive wages compared to our foreign airline competition is to no way make us stronger, better or more Australian. The third point I want to make is that we need to be aware of the global and national realities that frame our times. We confront very serious global economic challenges in Europe and the United States. We have warnings of deep downturns from the IMF and the World Bank, and we see daily news of more job losses here in Australia. The reality is simple. We must adapt or die. As Qantas, we want to adapt. We must adapt if we are to survive. We are working very hard to make this company fit, productive and competitive so that we can continue to employ many thousands of Australians provide great aviation services to our customers, and play a vital role in regional and rural Australia. The amendments that this inquiry was set up to examine, if passed, would force the Qantas Group to reduce and withdraw services, and I want it clearly understood that the certain consequence of these bills would be job losses and reduced aviation access. Every state in Australia would be affected. Measures targeting at lowering our competitiveness, closing off us from global markets, and raising our cost base is not patriotic, nor are they smart. Frankly, they are unworkable. Qantas is committed to Australia, to employing Australians, and to growing and investing in Australia. We cannot be constrained by misguided legislation that will achieve precisely the opposite of these aims. Thank you.
Thank you, Mr. Joyce. Now, I'll just get an indication of who has some questions, because we will manage the time. I have no intentions of keeping our witnesses here all day. We have I think 12:15 finish time, something like that. So is there indication, questions? Okay. Senator Heffernan, if you've got a couple of quick ones, I've certainly got some questions, and I know.
3/4 of an hour.
Well, I'll just ask a couple of questions first before we kick off. Okay, about the same. All right. Well, I'm going to limit the best I can. Okay. Now, just going back, Mr. Joyce, thank you, but from the questions that were taken on notice, and I appreciate the timing that you had 20 odd that came back, your answers, and then there was another 200 which you said in your opening statement. Now, in terms of the questions relating to the amount of rooms that were booked overseas prior to the announcement of the lockout and the shutdown of the airline, you wouldn't provide us with the cost of those rooms, citing, I think, commercial incompetence.
Yes.
Now, after 4 months, surely I would think that where is the commercial incompetence, and could you now provide that figure for us?
Well, we have a deal with brokers both internationally and domestically, Senator, and that the deal about what we buy hotel rooms is commercial in confidence with those brokers. The fundamental, I think, basis of your question, which I think we did answer in the response to them, was when the hotel rooms were actually booked in relation to the 2,800 hotel rooms in Los Angeles and Singapore. We were very clear in our answers that those bookings were made at 5:20 after the announcement of the grounding of the airline. For the international bookings, a call was made to a broker, and at 5:30 for the bookings of the domestic hotels. So in relation to, I think, the initial point, we've been very clear that both of them were made after the grounding. But our terms of purchasing hotel rooms, all of our commercial purchasing power terms are commercial in confidence, and we do have contracts to keep them commercial in confidence.
What we can do, Mr. Joyce, is for the benefit of the committee, is we can go into camera.
Yeah.
And then we can seek the questions to our answers in camera.
Well, we're happy to, we have to obviously keep our commercial and confidence contract requirements with the purchase of these hotel rooms. But if you want to go into camera later on the session for us to obtain the information and say to them, Senator, if you regard it as that important, we'll give you that information.
Okay. Well, what we'll do is we'll probably, I'm not assuming that you will want to do more in camera, but we'll have that opportunity towards the end of the meeting. It's up to me to manage the time to do that. Okay, in terms of the safety concerns, and I have a number of questions I'd like to put to you.
Chair, can I just raise one very quick point?
Yes.
We may well discuss this at a private meeting, but the issue at the hearings was when the hotel rooms were booked. The actual cost of the hotel rooms, as I understand it, is quite irrelevant to the issue at hand, because the issue at hand was, did Qantas book these rooms before the announcement? That was the big issue at stake, not how much they paid for each room. So unless,
the point is?
Well, why are you seeking to put the committee into a private session to determine what the price of the rooms was when there is no, from what I can gather, dispute as to the actual time the rooms were booked?
Because that was a question from the committee at the previous hearing, Senator Betts, that you were here, and we wish to seek the answer. So, noted.
Well,
it was asked and it was noted. Okay, what you've said, Senator Betts, if you have a drama and your mates on that side want to have a private meeting, I will facilitate a private meeting.
thank you. Thank you.
I can't understand why you're here, Senator Heffernan.
You will, in a minute you will.
I'm looking forward to your contribution.
You want to let him-
Okay, on that then, your decision to immediately ground the fleet on the 29th of October, Mr Joyce, was based upon what you referred to as an increased risk profile and the introduction of new human risk factors. What I'm putting to you then, Mr Joyce, were you concerned that Qantas employees would be or would have been a risk to the business?
No, Senator. Again, in the last session, we covered this in great detail, and I'm happy to go through it again, if you wish. We go through the reason for the grounding. And as I mentioned in the last session, we believe that we had three alternatives available to us. We had the alternative of keep on operating the way we were before the grounding, which was a death by 1,000 cuts. That was going to put the air organisation under severe pressure. It was going to continue for months, if not years, as one of the union leaders had said. We had the option of then taking our action of a lockout, and as a consequence of taking that option, grounding the airline, and we had the option of conceding to the unions. As I said previously, the option of conceding to unions, in my view, would have put the organisation at extreme financial risk and would have meant over a period of time that Qantas would not be financially viable and would not be able to operate competitively in the global environment in which we're faced. So we made the decision to bring the action to an end by conducting a lockout. The risk assessment that then took place was once we were going to do the lockout, when was the appropriate time to ground the airline? And it was felt, given the issues around potential distractions, by having a period of time between the announcement of the lockout and the grounding of the airline, that was a risk that we weren't willing to accept. And I said, as in my previous testimony, we take a conservative view on all of these items. We were the only airline that grounded the A380s when the engine explosion happened over a year ago. We were the first airline to ground our fleet when the volcanic ash had an impact on us. This is not about us assuming there's anything malicious going to occur. This is us worrying about distractions that could be caused with the announcement taking place. And the longer we left the grounding, the longer the time between the grounding and the lockout, the greater that risk. And that was a risk that we decided not to accept and to minimise. And that's why we grounded the airline when we made the announcement of the lockout.
And when you grounded the airline, I'll just reiterate that there was there any discussion with CASA prior to the announcement?
No, there was discussions with CASA on the ongoing issues that we were facing as an airline, and we did talk to CASA before the public announcement about the grounding, and we did talk to CASA about the reinstatement of the airline on the Monday before it was put back in the air, and we did go through the safety cases of putting the airline back in the air. So there was a lot of dialogue with CASA through this period.
So CASA had to give the all clear, is that correct?
No, for grounding the airline, CASA does not have to give the all clear. For putting the airline back in the air, CASA does have to give the all clear.
Okay, and that did happen when?
On the Monday after when the airline was reinstated. So the order in which it occurred is that I believe over Sunday night into the early hours of morning, Fair Work Australia made its determination to terminate the bargaining period between all three agreements. Then on Monday morning, we made the announcement that we were going to put the airline back in the air as a consequence of that action being terminated, our action being terminated as well. We then had to go to CASA to sit down with them with a safety case to say why it was safe putting the airline back into operation. And I believe sometime in the afternoon on Monday, CASA approved that reinstatement, and by 2 or 3 o'clock, we had the airline operating again.
Okay. All right. Now, I am mindful, very, very mindful of the time. So, Senator Xenophon, I'm going to kick to you because I know that you've got a fair bit, and then as you're asking your questions, I'll just quietly talk to other members of the committee to get some idea of what sort of timing that they need.
Thank you. Mr. Joyce, thank you for your opening statement and for your fourth appearance before this committee.
Thanks, Adam.
You said that these amendments would strangle international business there would be significant flow-on effects. What percent, because of particularly in relation to foreign cabin crew being paid Australian rates, what percentage of the cost of operating an airline relate to cabin crew? Not pilots, but the flight attendants.
Off the top of my head, Senator, I'm going to have to take that note. Our total payroll represents 20 as the group. Total payroll represents 26% of the cost base of the airline, and last year it was the highest component of our cost base for the group.
But in actual cabin crew, I put to you that it would be 1 or 2%, 2 or 3%.
I think, Senator, for an airline to be competitive, it has to be competitive in every area. So we cannot have significant disadvantages in any one area. And the proposal of these bills, as you know, doesn't just affect cabin crew. It would affect maintenance, which is a big component of our costs. It would affect flight operations. It would affect a large element of what the cost base of an airline is.
I'm surprised that you're not aware what percentage of costs to the Qantas Group cabin crew would be.
Well, Senator, we know the overall statistics on it, and this is a big company, and there's a whole series of individual costs that make up the cost base, Senator. And I'm assuming, I'm here answering 200 questions on notice, huge amounts of questions about the business.
I'm only asking you one question.
I know, and you could pick on one particular item, but we'll take the question under notice. I think it's fair enough to take the question under notice, and for detailed questions like that, you would expect us to take it on notice.
I think Senator Gallagher just gave you a compliment saying you're a mathematician by trade or by training, so
that's fair, Senator. I don't know the answer to that question. I'm happy enough to take it on notice. If you want to make a big deal out of it, that's up to you.
No, I'm making a big deal of that. I'm just asking you in terms of, you said dire consequences if cabin crew are paid, those that fly on domestic routes are paid Australian rates, wages and conditions.
Well, I think, Senator, with a couple of things. First of all, what we're talking about is the significant impact this legislation would have on our operation. And our operation does not just cover cabin crew, it covers a huge amount of the cost base. And I think it's fair to say this would cover them. And I think I'll ask Bruce to talk about the implications for Jetstar, because he knows the implications. And we have done the numbers about what it would mean in terms of the Darwin and the Cairns cost base. And it would add over $3 million in costs, just for the cabin crew alone, to the cost of Darwin and Cairns, and the routes that are already, as regional centres, unprofitable. It would add a burden on those routes, which would make them uneconomic for us to continue. So the impact is quite severe. And I might ask Bruce to comment on the details.
Yeah, maybe, Senator, let me provide a bit of colour on because I think what we're talking about is the tag flights. 90% of the Jetstar tag flights relate to Darwin. So Darwin's primarily where the tag flights operate. And as I said at the last Senate inquiry, I think I was asked a question about what constitutes the cost base of both cabin crew and tech crew. And I think I said somewhere in the order of 17 or 18% of Jetstar's costs. Now, that's just two labour groups. Cabin crew are by far the largest labour group in our organisation, and they probably constitute, I would say, around 10%. But you're talking about operations in our business that are the least profitable in our domestic operations. The Darwin route group is the least profitable, the most marginal, and you're talking about a business that makes a margin of somewhere in the high single digits. So something that does impact 10% of the cost base is a significant impact on the economics of that route.
Sure. Can I just, thank you for clarifying that. Can I just go to an article that was written by Steve Critty in the Australian on the 4th of February, headed Jetstar puts cap on domestic routes its foreign crews can fly. That relates to, and I understand that relates to a Fair Work Australia investigation into the issue of using foreign cabin crew. Is that correct? Is that a fair summary?
It's a Fair Work Ombudsman investigation, and there's two of them going on, which we talked about the last time, and those two investigations are still ongoing, one into cadets and one into cabin crew.
Right. But as a result of that investigation, there now has been changes in terms of the number of domestic sectors foreign-based crew can fly on international services. Is that correct?
That's correct.
So there has been a change since the last time you were here in terms of the way that foreign crew are rostered on those flights.
Yeah, but the way it works, and provide a little bit more detail, is we have a number of restrictions that we place on our rostering practices for international crew. Primarily, as you imagine, all the labour agreements, all the fatigue things that we've talked about, all the rostering limitations apply. We also have two other limitations, one of which is an international flight number limitation, so international crew can only work on international flight numbers. And in addition, they have to comply with the visa rules, which is a 30-day requirement for them to leave the country. So
Sorry to interrupt. Sorry, Mr. Buchanan, have you finished that?
No, I've got a bit more.
I'll let you finish. Well, no, I've interrupted now, sorry. Senator Xenophon, just the media are coming in. I just have to ask, Mr. Joyce, do you have any objections? You seem to be very photogenic when you're in this building. They're not looking for us.
So it's not in real life, Senator, it's online photogenic, right? I thought it was both in real life and on the cameras.
Let me tell you. Well, Mr. Joyce, take this as a compliment because the head's up the front of your photographic, so it's all about you. Are you comfortable?
We're comfortable, yes.
The shade is for the ugly.
I won't even argue with you there, Senator. Sorry, Senator Xenophon. Sorry, Mr. Buchanan, keep going.
Yes, and as I said before, most of our tag flights, about 90% of our tag flights operate through Darwin, and because of the Darwin operations, what was happening is there were some unattended rostering practices where the system was automatically optimising around Darwin, and some people were doing concentrated flying on what I call domestic tag flights, although the average is still only around 10% of the hours that cabin crew are working. Some cabin crew are doing a series of domestic tag flights, and in talking that through with the Fair Work Ombudsman, we decided that we'd put some limitations on that. So put some additional limitations on the rostering practice so that in addition to international flight numbers, in addition to the hours, in addition to all the other restrictions in the rostering practice, we've also put some limitations on the number of contiguous sectors that people can work on tag flights, and also the number of hours that they can work on tag flights. And in addition to that, because this is it's not about financial gain, what we've gone back and done is paid some additional money to anyone that did work more than 4 contiguous sectors on tag flights in the country during the last 2.5 years.
Okay, so it's fair to say that this review within Jetstar has occurred as a result of the Fair Work Ombudsman investigation?
That's correct.
Right. But these issues were raised by this committee some time ago, so that didn't trigger it. It was the Fair Work Ombudsman investigation that triggered these changes.
Well, I think they were going in parallel. The discussion here was in November. The Fair Work Ombudsman investigation's been going on way before that. I think it started in July or August. So it's a process that's been going on in parallel, discussions here and also discussions with Fair Work Ombudsman. The issue is now that those additional restrictions are in place.
Although that was discussed, I think, on the 25th of February 2011 at the first hearing to do with aviation.
I can't recall that, but I do remember it was discussed in the November session.
Okay. Can I just go to the issue, Mr. Joyce, of the whole issue of Qantas's books about international, in terms of the decisions made by Qantas with respect to the job losses or the redundancies in Australia, and also the expansion into Asia, is as a result of Qantas International losing, you say, a significant amount of money and being unsustainable in terms of its return on capital?
Not all the job losses, Senators. I think we again said in the last session there were some of the job losses that resulted in changes to the international network. We did scale back our operations to London from 4 services, or will be scaling back our operations to London from 4 services to 2 services.
And they'll be picked up by British Airways, won't they?
British Airways will be adding some more extra capacity, but the services are not being picked up by British Airways. In fact, British Airways are taking also one of their services out of Australia from the end of March. They're scaling back as well. So there is reductions in operations to Australia from both carriers. That's because the London route is the biggest loss-making route, and because with the economic situation in Europe, we feel that we need to reduce our exposure to the European market, given the significant deterioration that's likely to take place into the future. Can I say then there are other job losses as a result of change in work practices? For example, as part of the announcements that we made previously, we are closing our catering centre in Brisbane Brisbane because a runway is being built through that catering centre of taxiways and runways, and we have to build a new catering centre, which is a $75 million state-of-the-art facility that requires less people working there as a result of new technology. And that was part of the announcement that we made at the time. So there's a combination of route changes, network changes as a result of the $200 million losses, but also significant changes of work practice that are resulting in job losses as a consequence of new technology.
Can you just explain this to me, to the committee? On the 17th of February 2011, Qantas's media release announced a profit result. It spoke in terms of showing an underlying profit of $417 million for the half year ended 31st of December 2010. Made reference to the strong domestic performance of Qantas and Jetstar. It said while demand on key international routes continues to improve, the international environment remains challenging. But there was nothing there about the segment performance in the media release, in the statement, that indicated that anything was wrong with Qantas International. Yet on the 24th of August 2011, 6 months later, there seemed to be this dramatic turnaround that Qantas International reported a loss of over $200 million. Continuing down this path would be unsustainable. How can there be such a dramatic turnaround in the course of 6 months?
Senator, there wasn't. I mean, what you quoted there was we did talk about, we do report...
I've quoted accurately,
yeah, you have, Senator, but we do report the segments. The segments were reported at the time. We made it very clear that the domestic business was performing well, and we've made it very clear for some time. I think even if you go back to some of Jeff Dixon's comments before I was CEO, we've made it clear for some time that the international business has not been performing and have not been performing for a large period. We made it very clear during the global financial crisis that the international business was impacted more than any other business.
Mr. Joyce, sorry, the 17th of February 2011 quotes you as saying that all operating segments of the Qantas Group were profitable.
Yes, that's true, because Qantas is the operating segment. So Qantas was making money because domestic was making money. That's the same today.
Sorry, I'll quote you. It says that Mr. Joyce said all operating segments of the Qantas Group were profitable.
Yeah,
Would that include international?
No, the operating segments for the Qantas Group are Qantas, Jetstar, Freight, Frequent Flyer. They're the operating segments that we report, and all segments were profitable. Qantas was profitable. Within Qantas, domestic was making enough money to compensate for the losses in international, so therefore the Qantas segment was profitable. That's what the statement says, and that's the position of the airline.
You didn't think it was worth saying back in February that whilst Qantas itself is profitable, international is causing us to hemorrhage?
No, I think it's important for us to say that we've made a decision to try and maintain confidentiality about and not give competitive information away to report the Qantas segment as a whole, and that's something that's been done for some time. We did, because, and for a particular reason, Senator, because people were under the impression, and when you quoted those numbers, we had union leaders and other people quoting that these things aren't that bad. Qantas is still making money. The problem was that we had one part of our operation, the international business, that was losing over $200 million, and we had the other components of the business compensating for that, making profits that was compensating for international, and that position wasn't sustainable because the international position was getting worse. We needed then to communicate in August the size of the problem, what we were doing to fix it, why the problem needed to be fixed, and the scope of the changes that were needed to put it into context.
Mr. Joyce, you take your responsibilities. I accept that you take your responsibilities under the Corporations Act very seriously. Yes. There's a duty of continuous disclosure. If Qantas International, as a part of the Qantas business, was losing money back in February up for the first half of 2010-11, wouldn't you have wanted to at least indicate that to your shareholders?
We do meet our disclosure requirements. We do report on a segment basis, and we did report the segment of Qantas and where Qantas is performing. That's my requirements under the legislation. That's the requirements I met, and it's the requirements we continue to meet. And we reported additional information in August about the performance of international. Like, it's not my requirement today to report the profitability of London to the market, and I don't.
And no suggestion you should.
No, and so the same with international. We report what's required under the law and how we manage the business and how the businesses are performing. And that's exactly what we do, and that's exactly what we continue to do.
Well, Mr. Joyce, my understanding is that you made an offer back in November to the unions to have the books audited. Is that right? One of the big four?
So, sorry, Senator, to be absolutely clear, if the books are audited by KPMG...
No, to have an external...
So let me explain, Senator. I think it's important. The books are audited by KPMG. We're comfortable with that audit. Our board is comfortable. Our shareholders are comfortable. That audit happens every year, like every major company in the ASX. What we did offer to the unions, because this issue keeps on coming up, about the profitability of Qantas International, and the unions claiming that isn't true, and that international is not as bad as that, and there's costs being moved to other segments. We said that is not true. Our CFO sat down with the unions, including the pilots union, with our auditors for a significant amount of time to go through each of the items that they raised in immense detail. That was not sufficient to convince them that this was an accurate representative of the problems. So we did, in good faith, offered an independent audit where we would invite in one of the big four. We had two conditions. That had to be one of the big four. It couldn't be KPMG because they already do an audit. But we wanted it to be a respectable, large accountancy firm. But secondly, that we wanted the audit to bring the issue to an end. That we wanted the unions to declare that this is an end to the issue. Qantas International is losing this amount of money. Jetstar and the other components are making that amount of money. That offer was sent to the last offer was sent to the unions in early November, and we're still waiting for a response.
I think there's been, I spoke to advisors to the pilots, to APA, the pilots union this morning, and my understanding is that that negotiations are stuck as to the extent of the audit, whether it would be, for instance, either a positive assurance audit or whether it would be an agreed upon procedures to stipulate the scope of the audit. So as I understand it, there's still negotiations as to how detailed the audit could be.
We have presented a detailed proposal to the unions about the scope of the audit. As you know, Senator, you can do an audit to an nth degree which is not material. We have said that we want the audit to be relevance to material issues. Otherwise, the expense of the audit, the time involved in the audit will blow out of all proportions. So it needs to be reasonable and it needs to be material. And we are involved in the discussions of the scope of the audit in that case. But we have made that offer of a material audit to determine whether the reporting that we've said is material, fair and balanced.
But it's fair to say that at the moment there is an impasse as to what the nature of the audit should be, and that's why the audit hasn't actually occurred yet. That's putting it in neutral terms.
Put it in neutral terms, Senator. We're still in dialogue about the audit. We put a proposal to them, and we think that our proposal is fair, because I think if this was to be complete, it should be material issues, and not deciding whether engineer Joe Bloggs, when he did half an hour work on Jetstar, should be allocated to the P&L. That's not material. Material items in relation to the millions of dollars that we're talking about, to say on a material basis, is Qantas International losing more than 200 million? Is Jetstar making more than 200 million? And do we have a problem on international? I think that's what we all want to get to. That's what we've volunteered, and we're still waiting for that to be closed.
Can I just go to the issue of Jetstar and Qantas? I think Mr. Dixon, your predecessor, I think back in 2004, he said, look, Jetstar is not going to get beyond about 23 aircraft. In an interview with Alan Kohler on the 4th of December 2005 on Alan Kohler's business program on the ABC, he made reference in the order of, it's going to be about 20% of the size of Jetstar, won't be bigger than 20% of the size of Qantas in relative to Qantas. At the moment, I think Jetstar is 86 aircraft compared to Qantas's 198, which is about 43% in aircraft, and I don't know in terms of capacity what that means. It's planned to go to 131 aircraft. I think Mr. Buchanan can confirm that by 2014. Qantas will go to 215 by 2014. That will mean about 61% of the aircraft in the fleet would be Jetstar aircraft. Does that mean that there has been a clear change in strategy from what your predecessor said about the growth of Jetstar, so that Jetstar will eventually subsume the Qantas brand?
Well, I don't know the particulars of that interview, Senator, but I do know the dialogue I was having with Jeff Dixon at the time, and the 23 aircraft referred to the initial operation of aircraft that we approved for Jetstar. We did have options for aircraft, and we did have Jetstar in Asia starting off. So Jeff and myself always had the view that Jetstar could have had the opportunity to grow significantly, and I don't think that's a bad thing. I think, in fact, what we're showing here is the success of a little Australian brand created from nothing 7 years ago to growing to 88 aircraft, faster growth than Ryanair or EasyJet or Southwest have experienced, the largest low-cost carriers in the world. That's a great Australian success story. And any business that sets out at the start will have a business case and a plan. It will have opportunities and options that it can take. And if the business performs better than that original plan, of course the leaders of that business are going to expand it faster. Of course the leaders of that business are going to take those opportunities. And that is a great success that we've gotten Jetstar to that size, and it's fantastic that we can look forward to growing Jetstar going forward. I also want to be in a position where I can grow Qantas aggressively. I want to be in a position to turn around the international business so that we can add more aircraft to international and expand it at the same rate we're growing Jetstar. I want to grow Qantas in the domestic market, which we are. I want to continue the 10% growth that we're having in Qantas regional operations and add more Dash 8 Q400s to our domestic regional fleet. We will take whatever opportunities exist to grow whatever business exists, and that's a great success for Australian industry if we can do it.
Well, can we go to Jetstar Asia? You can only be a 49% shareholder in that, correct? In terms of your Asian businesses, because of various requirements. When you gave evidence on the 25th of February last year, you talked about the issues of safety. You said, well, we can always withdraw our brand from an airline if we're not happy about safety issues. Is that a fair summary?
We have a whole series of different measures, Senator, that we apply to subsidiary companies, and I think probably any company in Australia that has subsidiary companies around the world would do the same thing. We do have audits that we conduct ourselves, and we have a group audit activity. We have, when we co-chair on a carrier, for example, we co-chair on a whole range of carriers around the world. We assure, because the Qantas Code, Qantas selling activity takes place on it, we have a whole series of procedures that we use in how we audit those airlines and make sure that we're comfortable with that brand being associated with those airlines. It's no different from these subsidiaries in Asia. We also have additional. We also have affiliate airlines. For example, Cobham Airlines, which we don't own, operates aircraft on our behalf. We have zero ownership of that airline here in Australia, but we do have the Qantas brand operating on it, and we do have the same audit activity that takes place with them to ensure that they are acceptable to us with the use of the Qantas brand.
Mr. Joyce, in your opening statement back on the 4th of November, I know we were distracted by events that occurred just recently, but you said in terms of the Qantas Group investments in Asia are well within the Act's intent. You go on to say they are business in which Qantas is investing, but the revenue and profits will flow back to Australia, enabling us to invest in our Australian operations and protect and grow Australian jobs. That's fundamental to your strategy.
Absolutely.
But if we go to Jetstar Asia, there was an article by Scott Rochford in the Sydney Morning Herald on the 19th of January 2009, where he basically said that subleases to Sister helped struggling Jetstar Asia post a $4.5 million profit. Looking at subleases, just the account showed how Jetstar Asia earned $21.8 million Singapore in sublease revenue in the 12 months as against $12.5 million the previous year. Is that, in other words, if it wasn't for the subleasing arrangement, Jetstar Asia would be making a loss? Is that a fair summary? And perhaps Mr. Buchanan could answer that.
I think the first thing I'd say is don't believe everything you read in the Sydney Morning Herald, but more seriously, I'd say that the commercial operations of Jetstar Asia was set up as an independent business, and they operate leases on commercial terms. There is no cross-subsidy.
So when you say commercial terms, does that mean at market rates?
At market rates.
So if there's a lease, it's the sort of lease you'd expect.
Yes.
In business, in any business.
I know the details of this one.
Actually, it's a mistake of it's a misinterpretation of the facts, because in fact what that line item refers to in the P&L is referring to wet leasing back and forward between the two businesses. So in some instances what we do is one carrier will operate a flight for another carrier, and that may be because of aircraft availability, traffic rights, a number of different reasons, and we often do it for short periods of time, and it's designed to help us build a business in markets that we wouldn't otherwise be able to get into. So it's got nothing to do with actually aircraft leasing.
Can I actually clarify, Senator, that was from 2004, was it?
The article was on January the 19th, 2009, referred to, I think, the 2000, just for the profits for the 12 months to March 31st, 2008.
March 31st, 2008.
And they were disclosed several months later.
I think the other thing to say is that the Singapore business that we've set up is a very successful part of the Jetstar businesses, and as Alan said, it helps us in terms of the scale and size of the business in Singapore. It actually helps us build success back in the Australian operation. That scale.
Can I clarify as well, Senator? I think we're just confirming with Brett. Those aircraft in question for that year were actually aircraft, and the issue that occurred is, again, with the businesses, it can be quite complex. But what happened is that Jetstar Asia had surplus aircraft. I think it was 2 or 3 aircraft that they had out on lease to actually a Turkish company at the time, and they were looking at bringing those aircraft back. We were short of capacity in the Australian domestic market. We had a need for us to dramatically grow the Australian business, which was making money. We searched the market for aircraft and found that the availability of the Jetstar Asia aircraft suited all requirements of the domestic market. We then negotiated at commercial terms the rates that we would have gotten for acquiring aircraft in the market from Jetstar Asia. Those aircraft then had a double benefit. They came into the Australian market, increased employment here in Australia, allowed us to fly extra capacity domestic, make extra returns in the domestic market we wouldn't have made. We covered the cost of those leases and produced a profit out of them. I think it was a pretty profitable year for Jetstar in 2008. And then Jetstar Asia made a profit out of the leases. That was a win-win for both parties. It was done in pure commercial terms. It wasn't
in market values.
It was in market values, and it was negotiated on market values. I mean, I remember the negotiations because at the time they were tough. We would have liked to have them for a lot less. We got them at the rates that were appropriate and commercial to the market at the time.
But if I can just go, I just want to discuss some other issues of other subsidiaries. But in 2008, revenue was $182.1 million, expenses of $181.9 million, a profit of $200,000. The lease of Jetstar Australia was $20.7 million. In 2009, $245.1 million in revenue, $261.6 in expenses, a loss of $16.5 million. For the lease to Jetstar here, $31.8 million. In 2010, $224 million in revenue, $219 in expenses, $4.2 million in profit, but it was bolstered by $26.9 million in leases. What profits has actually come back into the Qantas Group from Jetstar Asia?
I think the piece you're missing there, Senator, is that there was a real cost to Jetstar Asia for those leases as well. They actually, there's a revenue line item for 3 aircraft, but if you look at the market rates for the leases of those 3 aircraft, there's a real cost on the other side. So it's not a straight-through profit boost that for that 12-month period where those leases exist, and they only existed for a short period of time while we were leasing those 3 aircraft.
But without the leases, you wouldn't be making a quid, would you?
No, we would. And last year we made a profit, and we've actually exceeded our competition. We're now the most profitable low-cost carrier in Singapore. We're the largest low-cost carrier in Singapore, and it brings considerable benefit back to the Australian business, both in terms of scale and franchise fees and a number of other benefits back in
I'll
Australia.
talk about New Zealand in a second, but in Jetstar, in terms of Jetstar Pacific, on the 8th of December, I think Olivia Worth from Qantas spoke to Matt Peacock of the ABC, and it quotes Ms. Worth saying that Jetstar Pacific has been close to break even. So Jetstar Pacific hasn't made any money at this stage, has it?
That's normal for a startup operation, as you have, and Jetstar Pacific was a particularly difficult case because we partnered with the Vietnamese government on the first privatisation of any government-owned asset in Vietnam. We're converting, not only starting a low-cost carrier, but we're converting an existing full-service carrier in that market to a low-cost carrier. So it does take time, and the Vietnamese market has been challenging. But these investments, I mean, to give you a feel, our competition in Singapore, one of our competitors in Singapore has a business that's similar to ours in terms of the size and scale. It's valued on the Singapore Stock Exchange at $600 million. And it's performing much worse than our business in Singapore. We invested $80 million in our Singapore business. That's the return to shareholders that we were able to generate from these businesses. Small investments, we can create assets of huge value, not only in terms of the ongoing value, in terms of scale, franchise fees and other benefits that come back into the Australian operation, and the IP. I mean, we're creating knowledge-based jobs in Melbourne of exporting the know-how of how to create successful businesses in Asia. And we're doing that from a business that started in Melbourne 8 years ago. It should be something that I think we celebrate rather than criticising. It's something that creates enormous value for the Qantas shareholders.
But it hasn't made money in 8 years, though, both
It
operations.
has made money. Singapore has made money the last 2 years, and the leases that you talk about were terminated, I think, about 18 months or 2 years ago. So it is making money, and it's making money for the Qantas Group on a number of different levels.
Can I just go to Jet Connect, because there was that Fair Work hearing, I think, about a year ago. A minority view, I think, one of the deputy commissioners was critical about the arrangement, about Mr. Daff and how little knowledge he seemed to have about the operations of the books for Jet Connect. You're familiar with that decision?
I am, yeah.
Yeah. And in terms of Jet Connect, you sign off on the accounts of Jet Connect?
Yes.
Right. And in terms of that operation, it's a company wholly owned by Qantas that provides Trans-Tasman services.
We go back on the basis of which, I think again we've covered this before in some of the other Senate meetings, Senator.
We haven't covered this before because I've actually got the books, so I want to run a couple of things by you in terms of their books.
Well, we've covered...
Some explanation. We've got 2 bills before the committee. Is this going to go on? Because we've got nothing to do with the bill.
I'm happy to answer that, Chair.
And you will have the opportunity, Senator, and I've sat through many hearings with you where I've scratched my head thinking, what the hell are you talking about now? So with the greatest of respect...
Couldn't possibly be right.
So with the greatest of respect, Senator Heffernan, I think that Senator
I just have a few questions in relation to Jet Connect, but the relevance, and fair enough in terms of the point made by Senator Heffernan, the relevance is that this bill looks at issues of subsidiaries in terms of their international operations, in terms of the intent.
I mean, you're entitled to minimise your...
Senator Heffernan, Senator Xenophon has the call and he doesn't need a lecture from you, Senator.
It's not fair.
I surrender.
Well,
if I can do the same in estimates with you, I'd be absolutely tickled pink if this is the way we're going to work.
God bless you.
I have to correct the record. I think Senator Heffernan said I may not want them to stay in business. That is completely wrong. I think, Senator Heffernan wanted to draw that.
But Senator, can I respond in terms of your commentary about Jet Connect and explain exactly what Jet Connect is for the purpose of the Senate here? We've had an operation in New Zealand for now, I think, over a decade, where Jet Connect was established to operate initially in the domestic New Zealand market, to allow us to have the feed necessary for our long-haul operation and our Trans-Tasman operation. That's when it was established over a decade ago. It could not make money in the domestic market. It lost significant amounts of money over that period of time. We also started changing the mission of the airline to compete on the Trans-Tasman, which, as you're aware, is a highly competitive market.
Right.
It's a market that's open to fifth freedom carriers like Emirates and Etihad, carriers that, in the case of Emirates, can operate A380s and 777s across the market at unbelievably low cost because they marginally cost their aircraft. They're putting on a significant long-haul international product at very low fares. So to be competitive on that market, and because of the way the time cycles work, you're probably aware that basing aircraft in New Zealand is a necessity to get the utilisation out of them for Trans-Tasman operations, because essentially if you start an aircraft in Australia, you lose 3 or 4 hours because when when you start the operations, it leaves you a lower utilisation, which makes the economics of the operation not viable. So starting an airline operations out of New Zealand was the only viable way for us to be economic, and using a New Zealand operation to compete against a major competitor, which is Air New Zealand, and our second major competitor, which is Pacific Blue, which are both New Zealand operations, was essential to us continuing services on that route. If we hadn't had JetConnect, Qantas would not be operating the level of services on the Trans-Tasman, and that would have had serious impacts on our long haul and our domestic operations here in Australia.
I just wanted to clarify a couple of issues. I've got a copy of the financial report for the year of the 30th of June 2011, which I think was received by the Business and Registries branch in Auckland on the 22nd of December. I just wanted, in fairness to the witness, Chair, if that could be shown to Mr. Joyce. I just thought it might be easy if you could just clarify something in relation. Yeah. I've got other copies. Yeah, sure. Can I just, you sign off on these accounts as you do, because you're, as head of the group, you're a director of the company. In relation to the statement of, in relation to its accounts, the statement of comprehensive income, Chair, I'm not saying anything. I'm just trying to get a clarification of one particular aspect of the book. I'm not suggesting anything. I'm just trying to understand something, and I'm sure Mr. Joyce can clarify it for me. If I could refer to page 2, which is Statement of Comprehensive Income for the year ended 30th of June 2011. Yep. Under expenditure, it refers to manpower and staff related for 2011 and a bit over $37 million. For aircraft operating variable is $23.9 million. Is that?
That looks correct.
Yeah. Could you just explain to me, aircraft operating variable, that would include fuel costs, is that right?
We have aircraft operating variable would include fuel costs.
Okay. It's just that in terms of the cost of fuel, in terms of it's about a bit over 2 tonnes per hour, and this is information that some of your pilots have provided to me in terms of their concerns.
Sorry, Senator. I think there's a misunderstanding of what JetConnect actually provides, because the intention here is not the way the aircraft work and the way the accounts in New Zealand work is that we're actually leasing aircraft from a New Zealand entity to fly the Trans-Tasman, and the results are reported in the Trans-Tasman and the Qantas results. So any profit JetConnect makes or loses as a result of providing that capacity to Qantas is reported in the Qantas segment. So this is an entity that operates in New Zealand that's providing essentially the way it's structured, because of the way it has to be structured, is providing aircraft and crew to Qantas to operate the Trans-Tasman. We don't say that JetConnect is a standalone profit centre. We've never said that. JetConnect is part of the Qantas operation and reported as part of the Qantas segment.
But again, Mr. Joyce, I just want to get a clarification so I can just understand this. In terms of aircraft operating variable cost, does that include fuel?
The operating aircraft costs that we do covers fuel. This we have to check it on this occasion, Senator, but it's irrelevant to the reporting of this segment, because this segment makes its reports. It is a wet lease provider, and as part of the wet lease provision, it provides that capacity to Qantas, and the profitability of those operations are reported in the Qantas segment. The purpose of this is not like Jetstar in Asia, is not like Jetstar in Vietnam as a standalone segment. It is as a operating vehicle to fly the aircraft across the Tasman. We don't say that this is the profitability of these routes. We say that this is the cost that this organisation charges back to Qantas, and on the route, Qantas does take other costs itself, like airport charges in Australia, other costs that aren't included here.
I see. The complexity of this, I think, Senator, is a wet lease arrangement can include different service provisions. So sometimes it may include fuel, it may not. Sometimes it may include other aspects. But the issue is it all gets consolidated back into the Qantas result anyway. But we can find out what's included.
Sure. But if you would include fuel, it would include all fuel, wouldn't it?
Normally a wet lease arrangement would include would be set one way or another. So either include fuel, or include everything, or wouldn't include. So you can set them up many different ways. In fact, there's all sorts of different types of structures you can have in the airline. Sometimes it may not include some of the labour components. Sometimes it may include all of them.
But Mr. Joyce said a minute ago that it does include fuel, or it doesn't include fuel?
Aircraft operating variable, when we usually report, it does, but we're checking on this one, Senator, because it may not include fuel in Jet Connect's case. Yeah, we're just checking.
All right, so we can just perhaps establish, well, that's key to the question. I'm just trying to establish whether it includes fuel.
And it is set up, Senator, as I said, as an operating vehicle, as Bruce is saying. It's wet lease aircraft to Qantas, and the profitability is reported in the Qantas segment. We get any profit that's made here, this profit, for example, a total comprehensive income from $11 million is allocated back to the Qantas segment when we report the results to the market.
While we're waiting for that response, can you just explain, if you go to under current assets of Jet Connect Limited, on the next page, it shows that cash and cash equivalents of $144 million New Zealand. Can you just explain that to a non-accountant? Does that mean that's money that's in the bank for Jet Connect?
It does. Part of what we make available to it, obviously Qantas is paying for all of those services. That cash is a form of a payment from Qantas to Jet Connect to pay for the crew, pay for the aircraft, and that cash is held by the New Zealand entity. We do report that cash in the Qantas cash total as well.
Sure.
So when we report the Qantas segment and report the group cash of $3.5 billion for the year, that is included.
But that's a lot of cash to have on hand for paid aircraft or whatever it is.
We have $3.5 billion for the rest of the group, Senator. We have a lot of cash.
Okay. All right. Any luck on the fuel issue, or are you just trying to establish that?
We're just checking. We think fuel is not included on it, but we'll just check.
So fuel is not included?
We don't think fuel is included, but we're just checking.
All right. Chair, I've got further questions, but I'm happy to defer to some of my colleagues.
Thanks, Senator Xenophon, and I've given a commitment to the opposition for an hour and a half, and that takes us to about 10:30. But let's go back to the international business. I think it's very important if we can, Mr. Joyce. I've just got a couple of quick ones. And you've stated the competition is fierce, and that's where the company is bleeding or hurting. So who are the major competitors on your international routes?
We have a large amount of competitors, Senator. So on the UK route, I think there are, on the Kangaroo route, there are 32 competitors that compete against Qantas, from the Middle Eastern carriers to the Asian carriers. Actually, there's no European carriers left on the route apart from Virgin Atlantic, but we have 32 different competitors operating against us. Into Asia, just about different competitor on every single route. So we have Malaysian competing to a wide range of destinations in China and India, Singapore to Singapore, India and China, and the rest of Southeast Asia. With Cathay Pacific as a competitor to China, to Southeast, to North Asia, Korean Air to Korea. So we have a wide range. Then on the Pacific, we have the Middle Eastern carriers that operate, so on the Trans-Tasman, the Middle Eastern carriers like Emirates that operate across the Tasman. We have Pacific Blue and Air New Zealand as a large competitor. Then on the North Atlantic, we have Delta Airlines, United Airlines, Via Australia, Virgin Australia, and Air New Zealand as competitors on that route.
Korean Airlines, North Atlantic.
Sorry, I meant the Pacific. My Irish routes are coming in. I'm thinking of the wrong ocean to get to. It's the Pacific, on the Pacific. Sorry,
But Korean Airlines fly Korea
That's
and
quite
across
right.
to Los Angeles,
yeah.
and it's cheaper for...
Yeah, you do have some passengers taking a routing through Asia. There's some passengers that I'm sure will go with Japan
So Korean
Airlines
Airlines compete against you into the United States.
as well. And we have Hawaiian Airlines that compete through to Hawaii and then on to the States as well. So we have a massive amount of different competitors.
Okay, thanks. Because what I'm trying to lead to is what is causing the decline in your international market? I know that you're going to say there are a number of factors, but I would be interested if you could briefly let us know.
Yeah, there's a significant amount. I suppose the first thing to say, Senator, we shouldn't be viewed any differently from manufacturing businesses that are taking place in Australia and the pressure that's been put under them because of the high Australian dollar. The high Australian dollar gives our competitors an advantage in this market. It means that the yield they get from the Australian market is attractive. It means that when they look at the Australian market, what they get in their local currency is very attractive compared to other markets around the world, particularly the United States and the European countries where the euro is being depressed. So they're adding capacity into Australia because of the attractiveness from that yield perspective. We've seen the Australian dollar result in over a 10% capacity growth by our major competition all the way through the global financial crisis. With no other market around the world were those competitors adding that level of capacity. Similarly, that's had a negative impact on our cost base because we're an Australian company with over 95% of our employees here in Australia, and we do all of our major operations activity here in Australia. Like the manufacturing sector, our competitiveness has been hit as a consequence of that strong Australian dollar. We have with a lot of our competitors have started up new operations. So Emirates is a relatively new airline. They get a lot more productivity and get a lot more efficiency out of their operations because they do not have the legacy that Qantas would have of 90 years with the history associated with that, which makes us not as competitive in terms of some of the efficiencies. For example, in the utilisation of pilots, Emirates, like Jetstar and like a lot of the carriers that have started up, can get 700 to 800 hours a year utilisation out of long-haul pilots. The Qantas number is closer to 500 hours a year, and that's a huge discrepancy in terms of efficiency between the different businesses. So there's a range of things that come into a senator, a range of different inefficiencies in different areas of the company, and they are the things that we are trying to change to ensure that Qantas International is efficient going forward.
So, Mr. Joyce, what's roughly, not roughly with you, you would know to the nth degree, I'm sure, and that's not being a smarty. I just don't know that you'd be on top of it. But what percentage of Qantas's, of the group's costs is wages internationally?
Last year, for the total group, last year wages was the highest cost item, which was 26%.
And this is international or?
It's both international and domestic and Jetstar.
Can you break it up for international for me?
We can get you that number. I don't have it off the top of my head. We can get that number.
It always worries me when a lawyer shakes his head in the negative.
I was looking at Olivia behind me. So we will get that number. It will be higher for international.
Okay, and I just want to focus on the international because that's where you've made it very clear you've not hidden it. That's where the challenges are for the Qantas group or for Qantas. So it brings me back to, and Mr. Buchanan, I know, and I take it, I agree with you 100%. You should never believe everything you read in the Sydney Morning Herald. So now we put that on the record, I'll be next that I want to whack up. But I have been reading the Plain Talking blog, of which I have no doubt that you have probably followed Mr. Sandiland's writings, and I find them very interesting. But it brings me back to the international now. They've been very, very critical, and I think Ben Sandiland's led off with, and I'll quote him on May the 11th, when he said about 10 years ago, the then Qantas CEO, James Strong, said that one of the keys to its historic successes as a carrier was getting its choice of jets right. And Mr. Joyce, I've heard your comments on the decision not to purchase 777, so you know where I'm heading. But he's been very scathing in saying that your competitors, of which you've mentioned, and in particular Air New Zealand, Virgin, Delta, and I think Emirates and Etihad and Singapore are operating the 777s.
Yes.
And I have heard your comments when you were asked at the shareholders meeting, but I would like to come back to you, and I know that you're going to defend the company to your last breath, but surely there must be some thoughts within Qantas. Why the hell do we let our competitors get a serious advantage over us by a better choice of aircraft?
Well, I have to say, Senator, again, you're absolutely right. At the AGM, I answered this in quite considerable detail, and I think the last Senate we covered at the meeting, we covered it all, but I'm happy to go through it again, because I think it is an important point, and it keeps on coming up in relation to the 777s. I'm glad you picked Air New Zealand as the first carrier on your list of carriers that picked the 777.
That was on Ben Sandlin's list, I just quoted him.
And I think it's a good example that this is not the panacea panacea or the holy grail that solves your international problems, because Air New Zealand is absolutely right, has a large number of 777s and is replacing its 747s. But Air New Zealand are going through the exact same problems Qantas is with its international operation. Air New Zealand recently reported that its international business is losing over $50 million, $1 million a week. Since Qantas is 5 times the size of that business internationally, that's roughly the same proportions of the losses we're experiencing on our international business. The Australian dollar has affected us more than the New Zealand dollar would have been, and we've got a lot more competition coming into this market. And so it says the 777 hasn't been the panacea for Air New Zealand to turn their international business around, and Air New Zealand are going through a comprehensive review of their business like we are. Now, can I talk about the fleet decisions? Because my background, Senator, has been in fleet planning for a number of different airlines. It's a topic I'm very passionate about. It's a topic I do know a bit about. And I have to say that you go back on the history of this, it would be very easy for me as the current CEO to blame the problems we have today on previous decisions that were made on the fleet. Because the fleet decisions were made back in 2000, as I think at that pointed out about the decision to go with the A380s. And the history of this, I think people are glossing over, because the history back, first of all, I would say that every airline's fleet decisions is different. So an aircraft that works for one airline may not necessarily work for another airline. Qantas has a unique operation internationally. It has super long-haul routes that operate all around the world. And because we have these super long-haul routes, there are what we call scheduling windows that work for the services for our biggest markets, which are the UK and to LA. And for example, if you go to LA at around 10 o'clock to midnight every night, you'll see 5 or 6 Qantas aircraft all departing at the same time. Now, why is that? Because we like to get the aircraft out before midnight because it's a good local time. We can't move them any earlier, because if we move them any earlier out of LA, they hit the curfew, for example, in Sydney, or arrive at an unacceptable time into the other airports. And so that means you don't need frequency. We don't need another service to Sydney between 10 and midnight every night out of LA. So the best aircraft for us is actually a bigger aircraft to allow us to grow. And the A380 was the decision that we made in 2000, because to LA, it's the best aircraft. It has a lower seat mile cost than the 777 because of its size. And the same to London. If you look at the London schedule, the timings that work to London are a late afternoon, early afternoon service out of Australia, has to arrive into Singapore before midnight, has to depart from Singapore at that time to get into London early in the morning, usually arrive at 5 o'clock. Another timing doesn't work. So there's no point in us adding more frequencies to the London market because it doesn't give us any benefits. Therefore, the A380 is the better aircraft to London and to LA because of those scheduling windows. Right. Then I take to Asia, because then the next conclusion is, why didn't you go for the 777s into Asia? And that would have helped your operations there. And certainly the 777 is a good vehicle, but when we were making the decision back in 2008, the aircraft didn't have the range. It not only wasn't the right size in our mind, or the right economics compared to the 380, it didn't have the range to go into North America or into Europe. It was only in 2003, 2004, when Boeing produced the 777-300ER that the aircraft became a viable vehicle for us. And at that stage, we'd already committed to the A380. And we already were of the opinion that Boeing were going to produce a new aircraft, the 787. Now, the 787 then became a very interesting vehicle for us, because not only is it a good vehicle into Asia, and it has lower trip costs than the 777. Now, lower trip costs are important because frequency into Asia does matter. And the 787 is a smaller aircraft, allows you to put frequencies in and service more destinations, is what we want to do. And the 787 had another advantage. It was an aircraft we could use domestically. The 777 couldn't be used domestically. It's too big. It would need major changes to the infrastructure or our domestic terminals. It's an aircraft within a domestic configuration, could be over 400 seats, and it's too big to operate in a lot of domestic operations. So as a consequence of that, we believe that the 787 was going to be a better aircraft than the 777, and it gives us a leapfrog in technology, and that's why we went for the 787. So it would be great if I could go back and criticise the decision and say we are fixing the fleet going forward to recover the international issues. But I think the truth is they are the right fleet decisions. They were the right fleet decisions for Qantas's network and Qantas's operations, and I do fully support them.
Okay, and it's just unfortunate it's beyond your control, but Boeing aren't holding up their part of the deal in delivery. But what about fuel then? What is the percentage of your cost on the international?
Again, I don't only have it for the total business, which I think is around 23% last year. It's going to be higher this year because obviously our fuel bill in the first half of this year increased by 450 million. We're now spending 2.2 billion on fuel. It represents this year it will represent the highest cost that we have in the organisation. But I'll get you the international split as well.
That would be increase that even further. Well, Qantas have already made a statement on that, Senator. Betts, we saw that they've made arrangements to increase their fares, but anyway. But on that, and I've just got to let one thing, I can't let one thing go, Mr. Joyce, but I find it ironic that the New Zealanders, who could never pride themselves on paying a decent wage compared to Australian conditions, still are struggling, because if they were that great, we'd still have our canneries here. So it wasn't. I know you can't, but I will.
New Zealand is a very important market for us, Senator, and we still have a huge operation in New Zealand, and I think it continues to be very important for the group.
No, I fully understand, but it certainly wasn't wages were a problem for Air New Zealand, and that's the case. Okay, because and my last one, but it would be interesting to compare the fuel costs on the 747s.
Yes.
And I understand the A380s, you've put that argument very succinctly, but the fuel costs on the 747s as compared to the 787s and the 777s, obviously you would have that homework too, because as much as we acknowledge the high Aussie dollar is hurting us, but I think the fuel usage figures would be very helpful.
I can give you some indication, and we'll get you more. The A380 has a 10% fuel efficiency over 10% fuel efficiency over the 747s. The 787 has a 20% fuel efficiency over existing technology. So that's the size of the type of efficiency we're going to be getting with these new aircraft. And we're getting it compared to the 747 and to the 330s that are operating with them. But I'll get you the comparison against the 777 as well.
I think one of the things probably worth saying, Senator, is if you look at our competitors, there's a number of competitors operating similar aircraft types to Qantas who are making money flying into Australia with the same aircraft type. So I think you've got to look more broadly. I think aircraft and fuel costs are an easy one to point to, but when you see competitors operating the same aircraft with the same fuel costs, profitable, you've got to then look beyond that. And there's many things in this country that make the Qantas cost base much, much higher. And we've touched on a few of them. Alan talked about efficiency, but you don't have to look very far to see the same sort of things that manufacturing firms are struggling with: payroll tax, depreciation schedules, which are very different from foreign competitors. Some of our international competitors have government-sponsored debt, so their cost of capital is substantially cheaper. There's a range of factors across the business that do affect the international competitiveness, not to mention the geography of not having a hub operation where you've got passengers moving in and out like you would be if you're in the middle of Asia.
Okay. Now, I'm going to, thank you. Senator Ludlam, you don't have any questions?
I'll come in later.
Okay. I know Senator Gallagher, do you have any questions before I go to Senator Heffernan? Okay. Senator
Reluctantly, you've come to me.
No, I have an agreement with the leader
Thank you very much, Mr. Chairman, for your indulgence. Just to clear up a couple of things we've been talking about recently, the leases, I mean, there is a yarn around the committee that there's some sort of dodgy lease arrangement. You know, some ex-employees at Qantas have got a lease arrangement.
No, you haven't.
Yeah, but others have said it. And I'd like you, not today, to clarify that. I mean, the allegation is that there's some shonky lease deal which enables former employees to get acquitted. You're familiar with what I'm talking about?
I'm not, Senator, but I can tell you absolutely, there is no lease deals with former employees.
Company,
I think there was a company that some former employees had a stake in, that this may be referring to, and those lease deals were locked in before they had a stake in that company. They were completely at market value. There was no difference in the lease rentals that were being performed against that company, the Qantas, and there's no shoddy arrangements taking place.
Thank you very much. Just want to clarify that because they love to live on rumours. The lease arrangements that you have, Mr. Joyce, are they in what currency?
What happens with a lease arrangement, Senator, is that usually aircraft are purchased in US dollars. Aircraft, when we purchase them or lease them, have a US dollar denominated, and then our Treasury Department locks them in to Australian dollars at the time in which we sell
the lease?
The leases, the purchase of aircraft and the leases. So some of our aircraft were bought when the Australian dollar was 50 or 60 cents.
Yeah.
Some of them are now being bought at a dollar. And the lease is the same, but they are locked in to whatever the exchange rate is at the time to minimise our risk to exchange rate fluctuations.
So, and with your fuel, do you hedge your fuel?
We do hedge our fuel. We have what's called a tailing hedge policy, where we do give ourselves certainty. We try not to speculate on the market, where we don't speculate on the market. We go out there and hedge fuel to give us time to adapt and to change. And our hedging has been very good in the past and has allowed Qantas to adapt to higher fuel price. For example, Senator, last year the fuel price was over $100, but Qantas did benefit from the hedging. Our customers benefited from the hedging in place, and it's only this year that we've had to put significant increases in the fuel charges into place because our hedging is running out. And our hedging is very low given current fuel prices, and we're seeing our fuel bill, as I said, in the first half of this financial year go up by $450 million. We now are spending $2.2 billion a half on fuel. They are significant increases, which unfortunately is the reason why we had to increase our fuel surcharges.
And just on past questions, you read out a long list generously to Senator Stoll of airlines that you compete against.
Yes.
It would be fair to say that it's a long history of airlines in recent years going belly up, wouldn't it?
There is, Senator, and even this year already, we're only 1 month into the year, and we have now of the Hungarian airline that's gone bankrupt after 66 years. Kingfisher is having issues with meeting its payment requirements with IATA, and Spanair, a big Spanish carrier, has gone bankrupt already. So we're seeing failures even accelerating at the moment. And as you point out, Senator, some amazing brands over the years have disappeared. Pan Am, TWA, Ansett. Every year there seems to be significant failures, and when we go into a significant financial crisis which we've had, we've seen even more failures. And some other airlines have had to go into bankruptcy for restructuring. American Airlines have used Chapter 11 restructuring in the States now to try and fix their business so that they can be competitive. JAL, another big partner of Qantas, have just left bankruptcy protection to restructure their business because they were losing significant amounts of money, were going bankrupt, and they needed the Japanese government to bail them out for that to be fixed.
So I want to actually come to the bill because it seems the Air Navigation Civil Aviation Amendment Aircraft Crew Bill will require Australian airlines and their subsidiaries to provide pay and conditions for overseas space flight and crew operating on their flights that are no less favourable than directly employed by the Australian airlines. So to put that into context, and with the indulgence of the Chairman, I'd just like to paint a picture of where we've been and where we're going and ask the question whether you've modelled this. I mean, in recent years we've gone 47 cents Australian to the US dollar.
Yes.
We signed a free trade agreement with the United States in 2005 when we were at 67 cents. When we enacted the bill in the next year, 2006, we were at 70 cents.
Yes.
In that process, God love them, we did away with 5% and 15% subsidies, tariffs.
Yes.
But we've now imposed on ourselves a 50% currency tariff.
Yes.
and you've got to compete against that.
Yes.
Now, you have pointed to the fact, and this is about a sort of a fortress, this bill is about a fortress mentality,
Yes.
fortress Australia mentality, and I can't see, I mean, it's bad enough owning an airline, making profits nearly as bad as a farm. Not quite. But look, just to put this into context, I was in Korea on a trade mission some years ago, and the woman that served the dinner in one of those international hotels, the cost of the meal was a month's wages to the waitress.
Yes.
That's what we're up against. So to deny that somehow there is a global market, I mean, farmers have got to wear the consequences of that. I mean, the car industry has got their hand out to the government because of this. I mean,
I'm just waiting for the question.
these shoes were $30 because I came from my work boots, you know, went down to R.M. Williams and they were $230. I mean, this...
Sorry, it's not going this right.
So where were they made, Senator Heffernan?
This
Where
is
were your
sort of-
shoes made? Why didn't you buy the R.M.
The
Williams?
banks are moving jobs to India, Telstra's moving jobs to India. At the same time, we are saying through this bill, but son, you've got to wear the consequences here in Australia. Well, you know, I mean, obviously we don't want you to go out of business. So have you modelled what would happen to the airline if in fact this was enacted?
We have done it in part, Senator, but can I say, I couldn't agree more with you. We are facing an open aviation market that's probably one of the most open markets in the world. Any airline can establish, as an example, a domestic airline in Australia and have it 100% foreign owned. That cannot take place in any other country. Even the Americans, the home of capitalism, have a restriction of 25% on any foreign ownership of any single airline there. We are setting up airlines in Asia where in some cases we can't own any more than 33% or 30% of the airlines because of the restrictions associated with them. In Europe, the same restrictions take place. In the international markets, we've had an open access policy for some time. Emirates operate well over 70 services here per week. This is the biggest market that they operate anywhere in the world in terms of the frequency and the capacity that they've added to the routes. So we have a very open market, and it comes benefits with having that. But it does mean that Australian companies have to be able to be flexible and adaptable to compete with it. And if we assume that we can lock Australian companies into the terms and practices that have been there for decades before that open market access was granted and before those changes that you outlined, Senator, occurred, then we were just signing the death warrant of those businesses.
I'm going to come to where this is going to take us. I read recently, and Senator Stoll will be interested in this, in the mining industry, some requirements put on by Chinese companies in buying our iron ore is that the Australian infrastructure be built with Chinese steel to Chinese specifications.
Yes.
I don't hear a whole lot of backlash on how you manage that. I don't know how you manage that. If the mining industry, you know, has to cop it.
Yeah, Senator, I think it's fair to say that these restrictions, as we said, would be unique to Qantas as an Australian company, and would put restrictions on us that other Australian companies wouldn't have to meet. And it seems crazy in one of the most competitive industries in the world. As you said, you know, the total profitability of the aviation industry last year worldwide was $6 billion, less than an Australian bank. And that's the whole industry. And this year it's going to be half of that. So to make a profit in this highly competitive industry is doing exceptionally well. And to have restrictions on Qantas and not to be able to compete on a level playing field with the rest of the world's aviation is crazy, and it will condemn Qantas to failure.
I mean, obviously, most Australians treasure Qantas, and we want to see it survive, but at the same time, the pilots, you know, want to be flying pilots. But did you say the average hours for Qantas was $500 500 hours a year?
500 hours a year is the utilisation for long-haul pilots.
And so what is the...
That's flying hours.
That's flying hours.
Yep. So what is the top wage for a Qantas pilot?
A380 captains would be paid up to $500,000.
So that's $1,000 an hour.
Yep.
Flying time for the captain.
What was that figure, sorry?
$500,000 was the top of the range.
Yeah, that's the top of the range. So what's the middle cut? What's the...
Around 300, I'll check, but I think it's around 380, yeah. I think what we usually say for a 380, the captain get paid.
So that's a pretty... It's better than the average lawyer, put it that way.
Yeah, so roughly...
Sorry, old mate.
Twice a politician.
Well, roughly...
Anyhow, that's just to put that into perspective. I mean, what we're up against, and I guess this committee's got to realise that half the world is technically insolvent. The US is technically insolvent.
Yes.
They've got $3 trillion of toxic debt. They've got just moving from 14 to 16 trillion of public debt to GDP. They're going to be at 100% of GDP shortly. Japan is at 200% of GDP. England, without the forward estimates, is 100% of GDP. So what that says to me, sorry Senator Xenophon, but you've got to get this into perspective, that says to me that our terms of trade with our currency is going to be against us for a long time. I mean, the US, the only way they're going to scramble out of their mess is to use inflation to devalue their debt.
Yeah.
I mean, so we're up against it. So with all that in mind, I've got some structured questions I want to ask about the effect of the bill rather than all the stuff we've heard about this morning. I don't want to read your books. I couldn't anyhow. I'm flat out sharing the show. So if all this goes ahead as proposed in these two bills, which is what we're supposed to be about, would you say that the future of Qantas is at risk?
I absolutely believe it, Senator. As I said in my open remarks, for example, the Qantas Senate Act amendments that would apply to Jetstar if they were extended would leave us with this dilemma of either having Jetstar competing against its competitors under restrictions that its competitors do not have, that I think would result in the failure of Jetstar in the long run, or that we would have to release Jetstar from the coverage of the Qantas Sale Act by selling it. Now, the sale of Jetstar is not in the interests of Qantas long term. The reason why Qantas is one of the only investment-grade airlines in the world, the reason why Qantas has made profits through the global financial crisis is because it has a portfolio of premium airlines, of low-cost airlines, of a frequent flyer and a freight business. And if you start dismantling that and start having to hive off components of that, that will result in the Qantas group having immense exposure to its international business more than it does today, and I think that would put Qantas in danger of failure, and we were very worried about the implications of this.
I mean, the facts are very clear. I think just look at it wasn't too long ago when 1 in every 2 Australians travelling out of Australia used to travel on Qantas. And customers today, there's 82% or 82 out of every 100 are picking someone else other than Qantas to fly on when they fly out of Australia. That's a pretty compelling stat in terms of the way customers are voting with their wallets in terms of going for the cheapest fares. So although we talk about...
That's why I bought the $30 shoes instead of the $200.
Exactly. So you've got these two policies which seem like they're incongruous, they just don't fit together. You've got on one side open skies, you've got trying to build a tourism industry and open the Australian aviation market to the world, which has resulted in Qantas market share declining to 18%. And on the other side, you're saying let's burden Qantas with all these additional costs in a highly competitive market, payroll tax, different depreciation rates. And now on top of that, we're saying you're going to put extra costs in the labour environment where there's already huge burdens in the labour costs, not just in terms of work practices, but also the exchange rate. And all of those just make Qantas more and more uncompetitive, and it's going to result in a more rapid decline of the market share out of Australia.
I mean, if you look around Australia, I mean, a mate of mine, Roger Fletcher in Dubbo, he's just shut his wool business. Can't compete. I mean, when the US took over from Great Britain, sorry to give you a lesson in history, Mr. Joyce, but 100 years ago, as
I'm being very patient, Senator.
As the industrial, thank you very much for that. Yeah, because we've got to get what we're up against. That's a big statement by.
You made it very clear.
This is putting Qantas at peril. They had a 2-to-1 labour advantage over Great Britain. China, in about a midsection of its labour costs, has about a 25-to-1 labour advantage against the US. The US is technically insolvent. I mean, we are trying to say, but we're going to have a fortress mentality for airlines, but not for everything else. We're going to meet the market with wool processing, sheep and cattle on the export market. Do you think the Parliament gets it? Do you really think, I don't know what the authors of this want out of it, but do you think they understand the implications of these bills?
I hope so, Senator. That's why, as I said, we're now back to the fourth Senate committee hearing that we've had in a year. We've answered 200 questions that we've been supplied on this, 20 questions on notice. This will be 6 hours in total just on this. I think if we haven't made it clear what the implications of this bill are, then we've failed. And I think you're absolutely right. I can't use in my opening statement and what we said just here, I can't use any stronger language to what I think it means for the Qantas Group. This is fundamentally important for the Qantas Group. We do not want to have restrictions on us that makes us less competitive. We need to be flexible and to adapt. And I don't want to see, I'm very passionate about this brand. I think it's an amazing success story here in Australia. Now, this is a little airline that started in outback Queensland, that's now the 10th largest airline in the world, the only investment grade airline in the world, one of the few profitable airlines in the world, has a group fleet of nearly 300 aircraft, flies to every continent in the world. It's an unbelievable success story. We should be all proud of it. We should be all talking it up. And we should be all saying, how can we ensure it's around for the next 90 years? This Act makes sure that it isn't around for the next 90 years if the changes are made. We need to make sure Qantas is flexible and adaptable, as it has been in its entire history. Once we were just a regional freight business. Then we were a domestic business. Then we were only an international business. Now we're a global business. We need Qantas to change and adapt like it has in 90 years. This Act tries to put us back a decade or more and restricts us in our ability to change to the market environment.
So, I've said many times on this committee that my great worry about the airlines, and Qantas is included in it, and there's a whole lot of other airlines that have gone belly up, is that if the travelling public expects to fly from Sydney to Port Douglas for $50 and you can go, I see, over the Christmas break for $350 to Hawaii, if we are to maintain the financial viability of an airline and at the same time maintain the safety record and maintenance of an airline, one or the other, in my view, will fail. If we continue along the logic that these bills take us, I don't get it because, after the war, if you bought something Japanese, World War II, it was, oh God, it's cheap and nasty and doesn't work. Then Japan became a leader in car manufacture and their costs caught up with them and they gone. Then we went to Korea and, oh God, Korean stuff, it's rubbish. They came good. And now we've gone to Chinese cars because the cost of labour is going up and China is about to use the labour costs where 80% of the population in Bangladesh earn $1 a day. So with all that in mind, it would be fair to say that the average Australian wants to ensure the safety of Qantas and the maintenance of Qantas, hence probably the idea that you should maintain your planes in Australia. But wouldn't it be fair to say, given technology, and lots of doctors come to Australia from overseas, especially from Egypt, the Coptic doctors, they're bloody good doctors.
Yes.
Just because they're trained overseas doesn't mean to say they're no good. Is there any sort of a risk in, if you to survive as an airline, you've got to get some of your maintenance done overseas? Isn't it fair to say that maintenance is up to scratch?
Absolutely, Senator. And I absolutely believe that you can get the efficiencies and make sure you're efficient and maintain the immense safety record that Qantas has had. There isn't a compromise between the two. I think absolutely they can go hand in hand. And if you think of what we're talking about, the A380s is a great example. We have 12 aircraft at the moment. We're never going to have we're not going to have 20 aircraft until the end of this decade. The size of that fleet is insufficient for us to have the critical mass to do it here in Australia. Now, if we were based somewhere else where it made logical sense for other airlines to do their maintenance here, then you may be able to construct a maintenance base to do the maintenance on those aircraft. So Qantas has the dilemma of building hangars for A380s that are going to be massively underutilised, with labour that's going to be utilised, or doing the maintenance in one of the providers around the world. And the maintenance that we've gotten done on the A380 have been in companies like Lufthansa. Now, he would say that the Germans do not have the technical or engineering expertise to repair or manage aircraft. And I think perceptions of safety are also changing. You look at the record of the world aviation industry, and it's continuously improved. The amount of accidents and fatalities every year has dropped as new technology and new systems have come into place. And now, with Australians travelling overseas, they take that for granted because the world aviation industry is a lot safer. And people are not willing to pay a massive premium for Qantas because of its safety reputation. Because people see the world airline industry as having dramatically improved. And what I say to the Australian public, if it is important for you that maintenance is done here in Australia, then you only have one choice. That is Qantas, because all of the other airlines that fly into this country have the vast majority of the maintenance done overseas, and 82 out of 100 Australians fly on those airlines. I cannot say the maintenance that is done by these airlines in other countries is not substandard, as you say. I mean, we're talking about people like Lufthansa, people like Cathay Pacific, Singapore Airlines. They have amazingly capable maintenance facilities that are world-leading maintenance facilities, and we should recognise that.
I'm really worried about what this is really all about. Would it be fair to say that in the international market you're unable to compete? And your competitors are, and why is that? Is that just a combination of all those things?
I think Qantas can compete, and we have to change to be competitive in the international markets. We have a plan that we want to implement, are implementing, that we think will turn around our international business. And I've committed to the market that we believe in 3 years we can get the business back into profits. To a break-even situation, and within 5 years to returning its cost of capital. But that is going to need significant change to the way we do the business. There are parts of our business that we already internationally are making money on. There are parts to our business internationally where we're losing a lot of money. We're addressing them with a combination of actions that we announced last year. One component is to pull back on the significant loss-making routes. Another component is to work with our alliance partners. And with American Airlines, we've just got antitrust immunity that is paying dividends. For example, our Dallas service is profitable already, and so performing the San Francisco service, and for a new service, that's an amazing position to be in. We are looking at antitrust immunity and alliance partners in other areas to do the same transformation we've seen on the North American route. And we are looking at what we do in Asia. And we need to do something different in Asia, because Asia is the weakest market for Qantas. It's the lowest share of our market share, and it is the biggest growth market, and it's going to be the most profitable market in the world. So we are talking to a number of parties about what we do in Asia to make Qantas relevant to that market, and how we can produce an alternative for our business customers that make us. That plan, we think, can get us there and can make us competitive. But this Act, if the changes to this Act go through, it will be 1 step forward, 2 steps back. And that's the danger that this Act will
So this Act will threaten your investments in Jetstar Asia, etc. Do you think, God help us we don't do it, you would actually lose those investments?
No, well, I think the last modifications changes the implications, my understanding of what it means for the Asia investments, but it does have severe implications for Jetstar in Australia. And as I said, it either means that Jetstar will wither, or Jetstar would have to be sold. If you had to sell Jetstar in Australia, then Jetstar and the rest of Asia would obviously logically go with it. And that would have implications for those investments.
So, and obviously Mike Murdoch is on to this, but in terms of regional services, and you say this could put at risk regional services, and Mr. Joyce, I hope we don't have too many Q400 incidents like the one we had the other day here in Canberra. How does you can go there if you want to.
Yeah.
How does this threaten some of the regional services in Australia?
Well, I think I will mention the Q400 instance because you do it. Yeah,
because it will come to us in due course, but it's probably not, through you, Mr. Chairman, in the context of this hearing.
No, it is, but
we will deal with it.
The Q400 issue that we've had, as we talked about, Senator, I think at your last committee, engine failures are occurring on engines all around the world. Qantas has an amazingly successful operation of twin engines because the safety issue, as you're aware, comes with failure of twin engine aircraft. And our failure rate on twin engine aircraft is 3 in a million hours. So a million hours operated, you have 3 failures. The world average is 7 in a million. The actual legislative limit is 20 in a million. If you go past 20, you have to ground the aircraft. So Qantas has won awards for the number of different manufacturers for the length of time it's actually had engines on wing without failure. For example, on the Boeing 737-800s, we've had over 1 million hours of the aircraft on the wing without failure. No other airline had achieved that. That's an amazing success story. So engine failures happen. They happen to every airline around the world, but they happen a lot less on Qantas. In fact, they're less than half likely to have an engine failure on a twin engine with Qantas than you are on another airline around the world. That's how successful we are with our maintenance of those vehicles. I might ask Bruce to talk about the implications to regional Australia on this.
Yeah, I mean, if I use the example in Darwin, and we were talking about some of these statistics before, and I think that's probably the most relevant. We've set up a business in Darwin which is quite unique. We've got an international hub that operates in Darwin, and we have a number of aircraft and a large employee base based in Darwin that support that operation. And they run from, and the way we've been able to build that significant hub in Darwin is by operating services through from other points in Australia through Darwin to a number of points in Asia. And it is our most marginal of the domestic ports, so it's the one that's the most marginal in terms of profitability. So it's the toughest one to make work, Darwin. Because it is a tough operating environment. Getting international services to work out of Darwin is tough because they're not thick routes, they're quite marginal. Most of our competitors have pulled out of Darwin. We're one of the few carriers that are still servicing Darwin, and we use the tag flights and the international feed to support those international flights out of Darwin, and that's helped obviously the Darwin tourism industry. It helps with some of the mining and mineral boom that's going on there as well, that people can get directly into Darwin from some of those international destinations. But if we were to, for instance, cabin crew, if our cabin crew costs were to double in Darwin,